Hi everyone, let's go over my Elliott wave scenarios on the Bitcoin chart, starting with the daily time frame where we're looking for price to still move towards the upside after this sideways range in the white wave 4 is finished. The common target for your wave 4 is between the 236 and the 05 Fibonacci, taken from the low of 2 to the high of 3, giving you a target between 92k and 83.3k. As you can see, this target has been touched. The invalidation for a wave of 4 is the 0.618 at 79.4k, and the invalidation for pretty much the bull market is this low here at 66.7k. Now, what is an important detail, however, is that you cannot finish this wave 4 at this current low, if this is the end of your wave 3. Now, let me explain in a little bit more detail. In this wave 4, if you're looking for an expanding flat ABC, then you still want price to make one more low, because the structure to the downside on the 1 hour time frame, which we will check later in this video, at the moment is a 3 wave, not a 5 wave. And what you want to see in an expanding flat ABC is inside wave C, a 5 wave structure. So what you would be looking for is still a local wave 4 and another drop to the downside in 5 to finish 4 and then move up. Now, you don't necessarily need to take that low. If price moves to the upside here, and this is going to be a confirmed 3-wave structure to the downside, then you need to look for a WX and a triangle in a wave Y, or a W zigzag X zigzag family structure, and then a flat structure in a wave Y, after which you then expect continuation. Now, as you can see, the result is the same, because the conclusion is we're still looking for price to move towards the upside. We're now more talking about the nitty-gritty and what the structure in wave 4 can be. But the important message is that in this scenario, you cannot finish wave 4 at the current low, because over here it is not an ABC, we don't have a 5-wave structure to the downside locally, and you're not allowed to have a WXY where your W is a zigzag and your Y is a zigzag in a sideways WXY, right? Now, alternatively, you would then need to look for structures like this, where you then have 1, 2, 1, 2, 3, 4 is finished, 5, finishing blue 3, and then start blue 4 and then go up for blue 5. But the result is the same. The result is a continuation of the local range, and then you still look for price to move up in a wave 5. Now, what is arguably a bit more bullish in this scenario is that if this move to the downside here is counted as a 3-wave structure, then theoretically it can be a finished zigzag in blue 4 and continue up. But as you can see, that would be a 1 candle wave 4 in blue, right? This wave 2 in blue is a lot longer compared to this little 1 candle here, which is very uncommon. As most common, a wave 4 is longer in time than 2. So it doesn't really make sense to count this zigzag to the downside, if it turns into a zigzag, as a finished corrective structure, and it then makes more sense to still extend the range. So that is why, from an Elliott wave standpoint and probability standpoint, the probabilities would be higher to continue that range and then look for a wave 5 later, because the conclusion is still the same. We're still looking for price to move towards the upside. It's just that we are first looking for a continuation of the range. Now, let's then go to the 1 hour time frame. And on the 1 hour time frame here, this is the flat structure. Remember the white wave 4 on the daily time frame, right? One of the structures you can keep your eye on is an expanding flat, 3-wave A, 3-wave B, and a 5-wave C. And honestly, we were prepared, right? Like the past couple of days, we were talking about a price moving to the upside as having the highest probabilities. We moved up and we took the high. And as price was ranging here, we were prepared with the 0.618 at 100K. If price hits the 0.618 at 100K, the probabilities are high to look for a bigger move towards the downside. Personally, I got out of my longs at 100K once the 618 was touched, and we got a beautiful move towards the downside. Now, if you're looking for a flat, however, you still want another move down, because you can see that at the moment, this looks like a 3-wave, right? It counts like a 3-wave. And if you want to have an impulse in C, which you need to, in a flat A, B impulse in C, you need to have a 5-wave, 1, 2, 3, 4, 5. Now the invalidation for your wave 4 is the 0.618 at 99.2k. I do realize that on some charts the 0.618 is already touched. But on my chart, the one I like to use, the Coinbase chart, which in my opinion is the best chart for Elliott wave analysis, it has not yet been touched. But I'm very aware of the fact that on other charts it has been touched, right? So I can't really yet confirm or look at like, oh, wave 4 is invalidated, because on my chart it has not yet touched the 618, but it will be something that I am keeping my eye on, right? So the 618 at 99.2k on the Coinbase chart here, very important level, would invalidate a wave 4 and then give probabilities to a zigzag to the downside, right? But as you can see in this scenario, you would look for price to take out this low at 90.6k. Now, if price, also in my chart preferably of course, moves to the upside and touches the 0.618 here, then we're going to count this structure to the downside as a 3-wave move to the downside, which then actually gives you more reason to be bullish, as then this is a corrective structure, and if you get a corrective structure to the downside, then the probabilities automatically increase to sooner or later for price to take out this high and look for continuation, which by all means is still the highest probability on the daily time frame anyway. Now, what I said on the daily with that second daily scenario, right, where we have a finished blue 3 and look for a blue 4, a zigzag to the downside here is incredibly short in time for a blue wave 4 compared to your blue wave 2 on the daily time frame. Remember, I might have to go back in the video, but it's very short in time. So a zigzag here can be part of a bigger corrective structure. It can be a double zigzag, a WXY, a sideways, can even be a flat again, can even be a triangle. That's the problem with a zigzag that starts a correction. It opens the door to many different things, right? So it's a little bit tricky. Now, if you're looking for the white wave 4, right? So we have our corrective structure that starts here and you're looking for the white wave 4 and then price to move up. Then as mentioned on the daily, we're not allowed to count a finished WXY here, right? Because we have a zigzag structure in W and then a zigzag in Y in a sideways WXY, which isn't allowed. So then we need to think about either WX, a triangle in Y, or WX and then a flat structure in a wave Y, right? And then continue towards the upside. From a psychology point of view, this would be quite hilarious, creating another high and then move down. And guess what? That has happened before, because when I was doing my analysis and I observed this move to the downside and I saw this wick and the move to the upside, it didn't yet touch the 618 on my chart. But the moment I analyzed this, I was very aware of price action that we had earlier. So let me go like this. What you see on the chart is a bars pattern. It's basically a copy of price action in the past, and I copied it on top of the current price action. And this here is copied from the ETF news launch, this range over here. So this move down was on the 3rd here of January. I'll never forget, because I was live. I had the most amount of viewers ever, 500-600. So this is ingrained in my brain. And when I analyzed this morning the move to the downside, I had to think about this here, right? Like very, very nice 3-way structure. But then when I went back to this part of the chart, just look at it for a second, right? Just look at it and how it moves. And I was like, wait, this actually looks quite similar to what we have at the moment, right? And price doesn't rhyme, or sorry, price doesn't repeat, but price can rhyme. So it's at least worth being aware of that historic price action with what we have at the moment. And what you can see is then the pink bars pattern is the price action from back in the day, right? The ETF range basically. And then of course we have the normal candles. And you can see that quite nicely price is following, right, the bars pattern. Now at the moment price is quite simply ranging over here, but you have to be aware of the bars pattern, right? And this would be a scenario where you would again take the high, then move down, grab the lows, liquidity, and then you continue your way towards the upside. And during the ETF launch. This move down, of course, corrective, and this was the move that led to 70K per Bitcoin, right? So very, very interesting indeed. And definitely something that you can put on your chart as well. It's here on the left. You just go to the left, the settings here, and then bars pattern. You click from the start of the range till wherever you want to end it, drag it all the way here, and then make sure it fits nicely. And you have it on your chart, right? Very, very interesting indeed. It's just another way to analyze price action. And because if price does touch the 0.618 and this turns into an ABC, we have to be aware of other corrective structures like a flat, like a triangle, like a double zigzag, or even like a sideways structure, right? So in other words, a continuation of the range. If we then look at the CVD divergences, then we do have here bullish CVD divergences, right? Higher low in price, lower low on the blue CVD. We also have a bit of bearish CVD. Now, I like to say, and this is based on research and my data pool that I collected back in the day, a lot of data, is that I don't like to trade CVD divergences with a very high volume, low or high, both ways, right? It is better, actually, I talk about I don't like to trade, but from a analytical standpoint, the probabilities are lower for a CVD divergence to play out when you have a high volume, higher low, which is of course the reason I then don't really like to trade it per se. So what I'm looking for is a new range to form, and of course price is ranging sideways at the moment, but it's still very young, right, after the move we had yesterday. So what I like to wait for is more price action, more ranging, more clarity, and then new, so not this bullish CVD, but then completely new CVD divergences here that are not yet formed because we don't have the price action, but that would be something I'm interested in. Not really interested in that bullish CVD divergence here because when you have high volume highs and lows, there is a higher chance for things, CVD to be leading, and it's less trustworthy. So it works best in a bigger ranging environment. Need to wait for a bit of a range. If we then look at the news, then we of course had some news this week, but also today, Friday, December 6th, we still have a little bit of news left, 2:30 p.m. and 4 p.m. Central European time. So make sure you trade safe because it can increase the volatility on the chart. And as yesterday, it's not that we're lacking any volatility on the chart. And if we then talk about the probabilities, then on the daily time frame, the probabilities are higher for the bulls. We are looking for wave 4 price action and still wave 5s at a later stage. Now on the 1 hour time frame, we got to be aware of the 618 at 99.2k on the Coinbase chart. On some other charts, the 618 is hit, invalidating a wave 4, but I would like to see that on Coinbase as well. On this chart, a flat impulse wave C is still possible unless we hit the 618, right? So ABC is still possible unless we hit 99.2k, then pretty much goes out the window. If we do hit the 618, the move down is counted as a zigzag and probabilities increase for price to take the high unrelated to the move down, becoming part of a bigger corrective structure. As mentioned, WXYs, triangles, whatever is then gonna happen. So in general, nice move down. We were prepared as well, right, with the analysis that we did first when we were ranging here. Probabilities were higher to take out the high. Nice, check, got that sorted, right? Nice long position for myself here moving up. And then we were prepared that if price hits the 618 at 100k, we are expecting a bigger move towards the downside. Very, very nice bit of price action. Nice respect of the levels that we were looking for as well. But with regards to the probabilities on the daily, it doesn't really change a thing. Bullish daily probabilities remain the same for higher prices at a later stage. I hope that this video was helpful or valuable to you. Please check out the CVD indicator, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.